Welcome back to the Deal Vault podcast. If you're a real estate investor looking to scale, secure funding, and learn from real deals, you're in the right place. I'm Greg, and together with Nate and Sarah, we'll sit down each week and break down market trends, funding strategies, real deal stories from our investors. Now, if you're ready to unlock knowledge, relationships, and capital you need, let's open the vault.
Guys, today we are going to talk about a very serious item that is up for debate. And I'm very curious to see what the two of you guys think about the controversy of Lowe's versus Home Depot.
This is
Which side?
very controversial.
So which side are you on? So I would like to kick it off with just some statements and see if you are agree or disagree. And I think we'll be able to determine pretty quickly which side of the fence that you're on. But
Okay.
walking into the Home Depot feels like you accidentally clocked in for a shift didn't apply for. Agree, disagree.
Strongly agree.
I know what I'm there for, and I can handle it, so disagree.
So Greg is clocking in for the shift. Lowe's will have you believing you're one YouTube video away from being a contractor. Agree or disagree?
Also agree. They tee it up really nicely to make you think that
Agree.
you can
Agree.
accomplish anything.
Agree. Home Depot is where confidence goes to die. You walk in thinking weekend project and leave realizing you should have hired someone.
Agree.
Also, yeah,
Agree.
strongly agree.
Okay. Lowe's doesn't sell materials, it sells optimism.
Yeah, I would agree with that.
It does look nice.
I always
Okay.
feel amazing walking in, and honestly, I think I feel amazing if I, walk out with some stuff too. Just is there execution or not?
You're gonna feel
BG.
It's just
Home Depot doesn't organize aisles, they scatter clues. It's less home improvement and more escape room.
Yeah, strongly agree.
I know my local Home Depot pretty well.
If you have to learn the store, and
It can feel that way, so I'll go neutral on that one.
Okay, last one, and then we'll just see which would you prefer to shop at. Checkout at Lowe's feels smooth because nobody's buying anything serious.
Strongly agree. That's awesome.
yeah, I would also agree. But I would say, there's only two ends of the spectrum, and there's no in between for a Home Depot checkout. It's either you walk right up and you get to check out, or you're behind somebody that is buying $14,000 worth of plywood.
Ooh, yeah.
In mixed lengths that all need to be measured.
They all need to be measured.
Does Home Depot even have true checkout attendants, or is it do it all yourself too?
They do. They have a
Yeah, they've got
very nice lady.
To me, I'm like, that kind of goes along the lines of, are you clocking in when you walk in?
So-
Or you're checking yourself out?
We have there's a very nice lady that works at our Home Depot. She's there at least every Saturday. And every time I see her, she asks about the kids
Yeah.
because she's seen them since they were little kids. So at least good on that lady in our local Home Depot.
Okay, so
Nice.
it may or may not be apparent, but Nate, Lowe's, Home Depot?
I'm a Lowe's guy, but I am an eternal optimist. So I really like shopping there. I like how organized and well lit it is. And I don't know. I don't think that I have self-deceived myself to think that I'm a contractor. So
Okay.
whereas I know, Greg,
I do like to kid myself. So let's be honest.
you're just a farmer / contractor trapped in an office shop.
Right. That's right. It helps me satisfy my inner get stuff done with your hands guy.
Yep.
I do enjoy that. So I tend to be for most things a Home Depot guy. Here's what they've got going for them. Like I won't just say that I act on feelings alone. The parking lot at Lowe's, our local Lowe's, is insufferable. It doesn't work at all. If you drive a truck, you can't park there. It doesn't work. Our local Home Depot, massive parking lot, pull in and out, and that seems to be the case, at least in the other parts of the country I've been to. So parking lot, massive win, and you're going there frequently to buy large things.
Like, I would agree with that. Ozark Lowe's has a much better parking lot than Springfield Lowe's.
Yeah, well, there you go. That's not the one I go to. Here's probably the biggest thing. When you hear the Home Depot commercial and that guitar riff comes on, you are ready to dominate the world. Like, it's so good. They should never change it because you just want to go dominate the world. So that's the main, that really is the main reason.
They know how to market.
I'm ready. I'm dialed in. But I will throw out one wild card. Menards.
I love Menards.
Menards has it going on. I think they hit both sides pretty well.
Black Friday shopping at Menards before.
It's pretty awesome. The mail-in 11% rebate, not my favorite thing on the planet. A little annoying. I think they know that. I know they may be in some legal trouble with that, but Menards, don't sleep on it. Pretty good. But for me, mostly I'm a Home Depot guy.
You mean Homey Depot?
Homey Depot.
Is that a Grahamism?
No, that's a YouTube.
It's a cute little girl on YouTube that gets her Yippa stick at Homey Depot.
Oh, sweet.
It's really funny. Look at it. It's a classic.
Cool.
But I know that seems like the most important thing, but we actually did have some pretty interesting content we wanted to chat through today.
This will be way less controversial, of course, than Home Depot versus Lowe's. But today we're going to talk about current world events that can be affecting the real estate market. I think we'll do our best to not make it hyper specific to today, March 25th, 2026, because the second that we air this, it's immediately outdated. There will be a little bit of that stuff in here, but hopefully we can at least draw the conversation out to make it a little bit more evergreen to say, okay, when these types of things happen, what's a good way to think about this and evaluate what's going on in the world around me? How do I interact with this as a real estate investor? Fair enough?
Fair.
Cool. So today, there's something going on in the Middle East. There's some funding stuff going on in Congress. And those are the major things in the news cycle amongst a bunch of other stuff. We all know the news cycle is full of lots of nonsense, and most of it's skewed. How do we make sense of that? How do we keep level-headed? Or if we need to freak out, how do we know when to freak out?
How do we respond appropriately?
Yeah. What say you?
I mean, I think that one thing that working in this industry since 2022, working in this industry specifically since 2022 has shown is that there's a lot of ups and downs. When I started talking to investors about loans, 30-year fixed loans specifically, we were talking about 3.5 to 4.25 interest rates. And
The good old days.
that was great, but it didn't last very long because mid 2022 things started to shift drastically, and by middle to end of 2023 we were talking 8.5 to 9% rates, which were like that's significantly higher than the bridge loan rates that I was talking to investors about. So I mean, rehab loans early 22 we were talking about 7.5. I had a client who had a 699 on an 18-month rehab loan, and they came back to refinance it a year later. They're like, well, it's time for my
9% amortized loan.
100%. It was a 30-year fix that was higher than their IO rate, and so
that was a wild time.
It for sure was, and we've now come down from that.
Yeah.
And so
and we didn't die.
And we did not die.
Realistically. And actually, I think real estate investors thrived, the ones that were willing to adapt. That investor maybe did lose their mind a little bit. It is frustrating when that happens. Some real estate investors lose their mind. This isn't fair. I understand that all of this stuff is happening for everybody else, but not for me. We're literally experiencing this right now. The 5-year treasury, which is what a lot of the long-term loans are indexed to, 30-year loans are indexed to the 5-year treasury mostly. That in the last, I'm going to say really week and a half has gone up a full 0.25%, which is a meaningful movement in such a short amount of time. That's tied to a lot of the stuff in the news cycle. We'll just kind of leave it at that because the things in the news cycle can change. And if it has the impact, that can be felt. We've got some real estate investors that will lose their minds and say, well, yeah, I know that that's going on, but not for me. And
Yeah.
I'm going to try to blame and hold other people accountable. I can tell you those people lose more money over time than the people that just say, copy that, I got to keep moving forward. This is the right plan. The picture looks a little bit different, but the plan is still the same. I've got to keep moving. Because the trick is, what are rates going to be tomorrow, Nate? Do you know?
My crystal ball has not revealed what they're going to be yet.
Exactly. Could be higher, could be lower. We don't know. But what we do know is moving forward and transacting and keeping the movement of your capital moving forward
Yeah.
at a reasonable velocity is really how people make money.
Yeah.
Get the best interest rate that you can at the time. That's what we do. We stay on top of that. A good mortgage broker is going to make sure that the client's getting that. But can a good mortgage broker dictate the 5-year treasury? Sarah, I don't know of any.
No.
Maybe there's better folks than us
I-
that are
I think
running it.
strong mortgage brokers should be involved in the industry and be knowledgeable and be in tune with that because, like you said, like our responsibility is to help not just give that information to our borrowers, but explain what is going on, why it's happening, and help give them the confidence to keep moving forward. Because again, I think sometimes when there is a shift, just I think naturally most people want to just stop moving forward. And I think, like you were saying, the strong investors are the ones that are being educated and looking for opportunities, right? Because I think that's an advantage as an investor that, if you're buying your own home to live in, you're going to think differently. But when you're looking at it for income as an investment property, I've seen a lot of our borrowers adapt as the economy has changed, as opportunities have changed. If they've been long-term rental, kind of turnkey only, well, when rates went up, there were more properties available again. So maybe now I'm going to switch and do some BRRRR because I can pick up properties again. So I think my encouragement to investors, and obviously I am more an optimist, just looking forward is trying to, yes, be educated, but if you feel like in that you're wanting to stop moving, get with somebody that can educate you appropriately and help you seek out opportunity. Because I think there's such an advantage to that if you're willing to adapt and be flexible, maybe looking at different markets and things. But I think a good mortgage broker going back is going to know this information and be in tune because we are the ones having those conversations.
Yeah, I mean, here's the scenario that I see like regularly when the interest rates rise and the investor feels as though they're caught in that. Because I mean, realistically, you are, but you're not necessarily caught. You are swimming in the interest rate environment. It may just not feel bad when rates are going down or they're flat. When it goes up is when you're most painfully aware. Here's the scenario that I see where people lose a lot of money. Well, rates went up a quarter, and a borrower, this is a scenario that interacted with this week. Rates had risen a quarter from our initial conversation with this borrower, and now we're like the loan's actually like becoming a thing, and their rate is going to be 0.25% higher. It's a bummer. We don't love that either. The payment for this person is going to go up $12 a month. $12, like the translation is $12 a month. Yes, that is for amortized over 30 years. Not likely that anybody keeps the loan for a full 30 years.
Yeah.
But this person is going to lose their mind and pause, stay in their rehab loan for at least another month and pay at least $1,000 in interest-only payment that doesn't go towards their principal,
Yeah.
right? It doesn't go towards getting out of that interest-only loan. It just pays interest, period, end of story. So they're gonna forfeit at least $1,000, like $1,300. I looked at it in interest-only payment for their rehab loan. They'll pay one more of those versus closing a loan that's because it's going to cost them $14 higher than what they thought they were going to get. At the end of the day, that loan truly, in all reality, never actually existed. It's what would have existed if you closed the loan that very second. That's not how loans work. And that false picture that they had of when I start talking about this loan, that is a freeze frame. It's like somebody being frozen in their adolescence or something like that. It's like they get stuck there and they can't adapt to it. They're gonna forfeit thousands and thousands of dollars to save $14 that never actually existed. They're gonna save the false concept of $14, and that's really unfortunate to see. So I think that we were able to work through it with that specific borrower, and that's okay if they're a little frustrated by that. I get it. We were actually purchasing a couple properties in 2022 as rates were rising. When we started our loan, I think it was at like a 4.5%, and when we closed, it was a 7.25.
Yeah.
And that was a tough pill to swallow, but
But
if we would have drug our feet, it would have been 8.5.
Yeah. Yeah, and I think again, I don't know if you guys like collectively, like what would be some principles for the borrower that's listening to this, that's thinking, okay, I'm feeling that tension, right? To just like want to stop or overanalyze or like feels like scared to keep moving forward. What would be best practices for that person? Like if you could say, think about these things as you're trying to keep moving forward, like what would be the best advice that you would give them globally, best practices for this, you know, environment that we're in? Because if it's not this, in a few years it'll be something else. It comes up in cycles.
Right. I mean, I think the big thing is like the blame game when the treasuries move is a waste of time. It's a waste of mental bandwidth. It gets you nowhere. So entertaining that is just a waste of space, and it takes you away from actually addressing the problem, and you lose sight of that. So the first thing I would say is don't play the blame game, because blaming that is you go nowhere. And instead of doing that, focus on the problem that you're looking to solve. What is this loan doing? And is that result still a viable end solution?
Yeah.
If the answer is yes, are there any adjustments that could be made based on the environment? Yes or no? And then move forward. Like you still have to transact. Now, there are certain circumstances certainly where, hey, because of this doesn't make sense currently.
Yeah, we advise on that.
Yeah, that's fine. We would never want to do a loan that somebody doesn't serve somebody's best interests.
Mm.
I think of somebody that's like, I don't have to do this refinance. I don't have a property under contract right now that I need to do a cash out refinance on. I've got a free and clear property. I do want to do this transaction. And as moving forward, rates tick up, et cetera, okay, maybe it's not that important. Or it was going to be a rate and term, and that exchange of rate makes this whereas a cash in refinance versus a cash out, and waiting a little bit, could potentially help with that. You're in that scenario though, you are banking on your own crystal ball of rates coming down in the near future. So it's really a matter of tolerance to wait. If you have the tolerance to wait, hey, that's fine. You're banking on the crystal ball, but you do have the tolerance. It's evaluating what is your tolerance to wait 6 to 12 months, because we don't really know in today's environment. The thing going on in Iran, do we know when that's going to end? I don't. Do you?
No.
Nope. Do you? No. I mean, and President Trump, like him or hate him, like I think what he does is try to keep people off balance a little bit. He's working the politics. So like maybe even with other administrations, you could try to predict a little bit better. With this administration, for better or for worse, like trying to predict is pretty difficult to do. So it's really a matter of what is your tolerance to wait. If it's pretty low, just keep moving.
Yeah.
And get over what has happened in an environment that you or I or anybody else has any real control over. Swallow the pill and let's do it. If there's an adjustment that can be made to your loan, great. Ask some questions, like totally reasonable. Hey, based on this movement, is there anything else we could do to recapture some of that rate movement? I'd be happy to, look at a different fee structure or something like that to account for it. Great. Let's see what that looks like and see if that's a a better way to slice and dice your loan versus the perspective of, oh my gosh, this is all this person's fault and I'm going to halt this loan process even to my own detriment. I just see that so many times, and people will, you know, step over dollars to pick up pennies, and they're actually even just fake pennies that were a figment of their imagination.
Sure.
And that's really frustrating to see for that person's sake. So that's the thing that I would put out there is really stay focused on actual tangible things that you can control. Are we moving forward? Yes or no? Is there an adjustment that can be made to my loan? Yes or no? And which one do I want to do? This one or that one? Do those things and you can actually take advantage or make the best of the situation versus I see it so many times people just get frozen in a change and y- time and time again people just lose money stepping over dollars to pick up maybe pennies that they don't really actually know.
Nate, do you have any other thoughts as a fellow optimist? Any last thoughts for investors?
Yeah. So I think in my conversations with folks, if the rate is wildly important to them, then which it typically is,
Yeah,
what
30-year loan.
my
That's
my pitch to them when we are getting a loan started is, we want to move at whatever speed you want to move at. And so with a purchase, that's typically, we want to close in the next 30 days or so. And so the thing that I talk about is, rushing to get that rate lock, which is rushing to underwriting. And so I just heavily emphasize, prioritizing, contacting third parties, like,
Mm.
making sure that your title company is on board with this transaction, making sure that your insurance agent, like you're involved in those conversations. You can leave all that stuff up to us. We're really good at, talking to those third parties as well, but it helps if the borrower is engaged. And then also if the borrower, when they receive their, appraisal payment link, which is one of the first things that a transaction manager does, is send that to them, that they will make that payment instantly. So that way we can get the appraisal ball rolling. Because otherwise we're just a little bit stagnant until that happens,
Yeah. So kind of what I hear you say is like if you are moving, if you've gotten to the point where you're moving, like staying the course and trying to move quickly is going to support you and benefit you versus just kind of waiting, for another thing to change and create frustration is just trust us, come to us when there's concern or confusion that's going to make you want to halt, right? Let's talk about it. Let's ask some questions. Like we want to be a resource to you and then just do everything you can to keep the file moving. And if that's being proactive versus reactive in advance, that's only going to serve you in just getting this done before any additional things happen that create that stopping point mentally.
for
So yeah, I think that's really good advice. And again, if it's not this, it's going to be something else. So I think just we want to be a resource to our investors as investors, and we deal with that too. We just want to help you guys be educated through our education and help you problem solve through some of these mental challenges that we also don't know and we're also not able to predict. So, yeah, I think that's great, great support, guys.
Yeah, maybe I'll give like at least my perspective of like what's going on. So we do have a few more years of this current administration and we can like glean some just global thoughts from that. So um, President Trump is a real estate guy, um, typically going to be at least pushing pro real estate types of policies. That's probably a generally accepted thought process. Now, the translation on the street can be local dependent, pro or con, but generally speaking, that's going to be an overarching thought process. And this administration is likely to do whatever they can to create a lower interest rate environment. Now, that being said, there are things going on that the administration is doing that are creating an environment where rates are more likely to go up. We're actually experiencing the up movement of the treasuries right now based on stuff going on in Iran. And I think, what does oil have to do with real estate and interest rates? Well, if you've got increased oil prices, price at the pump goes up a little bit, we're experiencing that. You've got your consumer price index that will report, I forget when it is. This month, it doesn't matter because this isn't necessarily a time-stamped event. Gas goes up, price index goes up. That means inflation is up, or at least not holding or decreasing, and thus the Fed is less likely to continue to lower interest rates. So you've got some kind of opposing forces going on here, which from an interest rate perspective, is if that's all that we're going to consider, creates an environment where interest rates would hold or increase slightly, even though the administration generally is going to do what could be done to create a lower interest rate environment. So my interpretation of that is, since there are some things that are causing the increased rates, there's likely to be some pushes to counterbalance that. What that is, who the heck knows?
Who knows?
But I don't think really any of the folks in Washington are necessarily entirely dummies. Like they've got eyes on this. They may not be dummies. Execution is a different story. But they are aware of some of this stuff. I'm just some guy in Missouri doing a few loans a year. They've got a full view of a lot of this stuff. But generally speaking, for the next few years from the administration, there's going to be at least a push to create a lower interest rate environment. Does that happen or not? Don't know. We'll see in a few years, and we'll be able to look back and say what happened. So,
So yeah, just keep moving, keep using us as a resource. We're trying to stay educated and on top of things and keep everyone optimistic and just looking for opportunities. And, we want the loan to be the best fit for you, not for us. And so, yeah, I think that's good information. Hopefully investors feel encouraged.
yeah, let's see what actually happened. Thanks for listening to The Deal Vault. If you found value in today's episode, be sure to subscribe and share with another investor and leave us a review. If you're looking for help funding your next deal, you can always holler at us at loanbids.com. We'd love to help you on that deal. Until next time, keep building, keep investing.